investors. And then on top of that, systemic racism makes it prohibitively difficult for Black, Indigenous, and people of color to start businesses and to build wealth. Co-ops, however, are a robust and equitable business model, an ownership model, and they represent an alternative to traditional winner-takes-all capitalism. You may be familiar with co-ops. For some of you, co-ops may be really new. You may know businesses that are co-ops and not even realize they're co-ops. So the Associated Press is a great example. There's REI, Ace Hardware, Ocean Spray, Stocksy United, so many different businesses that are co-ops and you may not even realize. The top 100 cooperatively owned businesses in the United States generate over $228 billion in total revenue. So this isn't some small niche area of the market here. We have a potential to build businesses at scale. And so with that, I'm going to start to ask everyone in our group to introduce themselves. And maybe I'll ask Greg to start by introducing yourself. And Greg, would you like to offer a definition of a co-op for everyone in the room today?
Yeah, thanks, Jessica. Hey, this is Greg from Start.coop. Thanks for those of you who are joining the other room. Apologies about that. But yeah, cooperatives are this funny word that everyone's heard the word cooperative, but 89% of people can't accurately define it. So the way I'd like to explain cooperatives is we're all familiar with the traditional winner takes all version of a business where maybe you have all the investors on one side or a handful of founders making a lot of money. And then you got the workers or the consumers on the other side, people supporting the business who are probably benefiting very little. And really what we're trying to do with cooperative ownership is just bring the Venn diagram together and say, what if the people who supported the business actually own it? I think where it sometimes gets complicated for people is that cooperative ownership can exist at any level of the supply chain. And by that, I mean, you can have a consumer-owned business, like a consumer-owned grocery store or REI. You can have a worker-owned business where the workers or employees own the company. You can have a cooperative owned by small business owners. So Ace Hardware is a co-op of 4,000 hardware stores. And you can even have a cooperative that's owned by farmers like Ocean Spray or Blue Diamond Almond, to Jessica's point. So I think I'll pause there, but it is really an ownership model, not a business model. It's one of the key things we try to explain to people. Thanks for joining today.
Great, Austin, why don't you kick us off with who you are and what's your business?
Hi, sorry if you can hear me making coffee right now. My name is Austin. I'm a co-founder of Ampled, spelled AMPLED, and we are a web platform that allows for direct community support of musicians. So one way to look at it, it's not too different from like a Patreon for musicians, but instead of being owned by venture capital investors, it's collectively owned by the artists and workers. So we've been really deliberate in making sure that the platform is 100% owned and governed by the people that rely on it, and not speculative outside investors. So we've opened up the platform in May of this past summer, and so it's approaching a year. We have almost 50 members now, and we just continue to grow steadily, and are just really grateful also for the support of Greg and Jessica. We were in the second year of Start.coop, and yeah, are really like firm believers in the co-op model, especially applied to web platforms. I feel like web platforms, even more specifically ones with user-generated content, where there's a lot of value being generated by creatives and not as much being captured. So the co-op seems like a really interesting fit that, I would love to see more. I know that Jessica, you and Greg are like really like at the front, like in the trenches, in the co-op trenches. So I always appreciative of that. And yeah, that's a bit about me and Ampled, and I'm looking forward to hearing more about the other groups, Drivers Co-op and also Kinfolk as well.
Great. Thanks, Austin. So great to have one of our 2020 entrepreneurs with us today. So thanks for being here. Next, we're going to turn to Nirva. Nirva is one of our 2021 entrepreneurs. Nirva, do you want to introduce yourself and tell us a little bit about Kinfolk?
Yes. Can you hear me?
Absolutely.
Awesome. Technology is working today. My name is Nirva Boursiquot, and I am the founder of Kinfolk. Kinfolk is a 100% Black and consumer-owned marketplace. We're focused on working with the world's best Black creators and innovators to provide our community with access to authentic Black-owned essentials that are not, easy accessible. We are really excited about the work. We launched in September, and we're fairly new to the marketplace, but have gotten really good, traction and feedback from our folks. For us, it's really the name Kinfolk, right? That's part of why we named our organization. That is, it's a space for us to come together, right? Very much so a family and friends gathering where we can teach each other, have fun, raw, honest conversations, learn something completely new, right? So cooperatives are not new to the Black community, but yet we don't talk about it. So for us, we're very focused on having that conversation, educating each other. Just overall, just a safe, fun place for friends and families where you don't have to code switch. And we can just see each other and learn and really, elevate and close the wealth gap within the Black community. So that's a little bit about us, and I'm super excited to be here. So thank you for the opportunity.
Thanks, Nirva. Thrilled to have you in the room with us today. Alissa, would love to turn to you. Why don't you tell us a little bit about who you are, how you came into this work, and what's your business?
Excellent. I'm one of the co-founders of the Drivers Cooperative, which is launching Co-op Ride, a driver-owned ride-hailing platform launching soon in New York City. So we have thousands of drivers who've joined, and we currently have a wait list for riders who would like to ride with us. And we're different from Uber and Lyft in the fact that we charge a dramatically lower commission to our drivers. We have due process rights for any rider complaints, as opposed to ad hoc deactivations, which can cut off drivers' livelihoods. And like through the co-op model, we have profit sharing with drivers, as well as drivers elect the board of directors, which appoint management. So what you've seen with Uber and Lyft is just this massive bifurcation between their tech, operations, HQ teams, and the drivers who are doing the work. And when Austin's mentioned this bifurcation between the people creating the value and the people capturing the value, I think that's so evident in the ride-hailing space. And I think that is why we're so excited to have a cooperative in the streets imminently.
Thanks for sharing that, Alissa. And I noticed that you have a party popper, which means you must be new to Clubhouse. So welcome to Clubhouse. Great to have you in the space. So everyone, welcome again to the room. We are going to be talking all things co-ops today, the what, the why, and the how of co-ops. We're joined by three amazing entrepreneurs of cooperative businesses. We have some questions that we'd love to pose to the entrepreneurs, and then we're going to open up for some Q&A with the whole room, and hopefully have a chance to really dive into the depths of everything co-op startup and answer all your questions. Hopefully many of you are on the entrepreneurship journey yourselves and thinking about whether a co-op might be a right fit for you. Some of you might have just stumbled into this room and wondering what co-ops are, but we are pleased to be here to share our co-op world and community with you and help you on your journey. So with that in mind, I would love to maybe start by just asking sort of, how did you get into co-ops? Because I can say that, I started a business back in 2016. And I did what I think many people did. I went online, I went to Google, and I, typed in, how do you start a business? And the first 100,000 results were, you start an LLC. And so I took that for granted and just started an LLC. And when I came into the co-op world and started working with Start.coop, and one of our entrepreneurs said to me, well, why isn't your business a co-op? And I didn't really have a good answer, but I think the best answer was that I had never heard of co-ops before. And so I think for so many of us, we sort of stumble into co-ops and have this moment of, oh my goodness, this is so values aligned. This is what I want to be building. And so that's why I ended up moving into this role at Start.coop to really cultivate the next generation of cooperative entrepreneurs, so that others can have this moment and find this corporate form, this ownership model for themselves and their businesses too. So I'll turn to you guys. Does anyone want to jump in and share your story of how you stumbled into co-ops?
So for you, Jessica, it was like in the past few years that you've like warmed up to co-ops more.
that I've become a
Right? I guess
complete.
I never asked you that. I never.
Yeah, like in the past few years that I've become a complete evangelical, and that's all I talk about. Yep, that's
Mhm.
true. It's true. It was 2018 that I sort of stumbled into this world. And just, it was just, like I said, for me, it was this complete moment of, my goodness, how did I not know this existed? How do more people not know this existed? And how can I be a part of a movement that sort of says less than 1% of new businesses every year are co-ops? What if that were 20% of new businesses every year were co-ops? We're businesses that were sharing ownership and the benefits of ownership with their community. And to me, that was so compelling that I sort of stopped what I was doing and changed the trajectory of my career.
Interesting. Yeah, for me, it was stumbling across some of the academic research at the New School from Trevor Scholes, like talking about platform cooperativism. And I was kind of struck by how little practical examples there were that were being referenced, but how powerful the ideas were. Also, kind of struck with how like academic and abstract the language seemed to be. So I felt like there was an opportunity just grounding it in kind of like practice and pragmatism. But yeah, I read a lot of stuff that like Trevor Scholes and Nathan Schneider had written. Like there's a book called Ours to Hack and to Own, which I really enjoyed a lot. And I know there was I think like this idea of like a Uber owned by drivers is cited as like an early example that's a light bulb where everyone's like, oh yeah, that of course that would make sense. Is that Alissa? Did you kind of like come across some of that academic research? Is that like I'm curious what made you get into co-ops and start Drivers Co-op?
No, it actually wasn't academic research. After grad school, I was trying to figure out what form of self-employment made sense for me. And at my MBA program, like the two forms of self-employment that were sort of acceptable were either starting a venture-backed startup, which I did and then shut down, or doing a search fund where you raise a bunch of money from high net worth individuals and acquire a cash flow positive company. And I was looking into, okay, if I'm going to do the search fund model, what type of industries are interesting? And I was like, okay, I love working with normal people. And so I wanted to do something that was going to be the future of a lot of jobs. And so it was focused on home care. And I actually stumbled across Cooperative Home Care Associates, which is now one of our pilot partners with the Drivers Cooperative. But that was literally my first introduction, like, I don't know, 6 months ago, 6 to 9 months ago in the cooperative space. And had I not stumbled across Cooperative Home Care Associates, I'm not sure I would be doing what I am doing now, which I think shows the importance of like having practical models that you can look to and believe that it's possible to run an at-scale business as a cooperative.
Yeah, that's so true. I just think exposure to all of this is such a key part. You know, you don't know it exists until you hear about it, right? You don't know what you don't know. And Nirva, I know that sort of echoes your story as well. Do you want to share a little bit about how you discovered co-ops?
Yeah. Can you guys hear me? I'm always worried my technology is.
Yep, you're good. You're good.
Sure. So the same, right? Stumbled upon co-ops. So I want to preface that with just some of the education, my background. I've been through an MBA program. I went through undergrad. I went to an HBCU. Shout out to FMU. And so I had my formal training in this never came up. So I discovered cooperatives last year with the work I was doing in supply chain. Met someone at CPA.coop, and he was telling me about what he does, and I'm one of those, I'm very nerdy, and I'm looking at folks' websites and top level domains, and I'm like, what is this .coop top level domain? Like, what is this, right? We know about .com, we know about .co, and .io, right? The new kid on the block, but I've never seen .coop, COOP. So him and I, we scheduled a one-on-one, had a conversation, and he just blew my mind with just telling me all about cooperatives. And so now I'm like, okay, I have to know more. What is this about? And so I started reading. I read Nathan's book, right? So Everything for Everyone, the radical tradition that is shaping the next economy. And I fell in love even more And so that led me to then discovering the collective courage. And at that point, I was like, okay, this is crazy. Like, no one's told us about this. And to come to find out, our community, the Black community, has a very rich history in the cooperative world. And that, some sense of, we use solidarity even then, right, for escaping, for example, like, the Underground Railroad. So again, it was just a beautiful discovery for me to figure out, okay, there's more than just an LLC and a for corporation. 96% of Black-owned businesses are sole proprietors, right? And that's because we just don't know, right? There's a lot of unknowns for us. So we are super, super excited. And so when the idea for Kinfolk, came to me, I was like, okay, we have to make this a cooperative to have, give our community some skin in the game and, just educate and rediscover our economic defense. So I stumbled upon it myself as well. And even with all the education that I have, this is not taught in schools. So I'm super, super excited to have learned, and I'm like shouting it out from the rooftop, like, oh my gosh, is that a cooperative? Like, what is this? And I'm looking at all the butters in the butter aisle and, looking at, what does it mean to be farmer owned and all the good stuff. So I'm excited to be in this world and also share with our community as well.
Yeah, thanks, Nirva. If for anyone who follows me on Twitter, you know that I'm always subtweeting all of these new IPOs. So, when DoorDash IPO'd and, Airbnb and all these other platforms are IPOing, and I'm saying, imagine if this had been a co-op, like, who would have benefited here? Who's creating this value? Who's extracting this value? So I hear you about looking at other businesses and always just thinking, gosh, what if it had been a co-op? What if it were a co-op? And also this notion of, you can go through an education, you can get a 4-year degree, you can go through graduate school in business and never once hear about co-ops. And that's certainly something that we're working to change at Start.coop. But before we jump into Q&A with everyone in the room, a question, Greg, for you. Do you think that some businesses are better suited to being a co-op than others? And if so, why is that? And which ones are they?
Well, Jessica, that's a great question. And I just want to acknowledge kind of the reason many of the speakers on the call got into cooperative ownership, which I think is this gap that many of us feel between what we see the economy being based on and what we would like the economy to be based on, right? Like the massive wealth gap, the massive, even more massive racial wealth gap, and how do we come of business structures and ownership structures that actually share more wealth, right? And one of the ways I've heard people explain cooperatives is, wouldn't it be nice if we had ownership models and business models that shared the wealth created by entrepreneurship, rather than just, we have 5 people in this country who own as much as the bottom 50% of the world population, right? You can put 5 people in a car and they own as much as 50% of the population. It's insane. So I think what cooperative ownership is, to your question, is an ownership model that simply shares wealth and shares some governance rights with the broader community. And so sometimes people ask me, can you only do consumer co-ops? Is it only in agriculture? And the short answer is no. Cooperative ownership can apply to any sector, to any business model. It's really just a way of sharing wealth and decision-making power. All that being said, I think the models I appreciate the most are the ones that unlock scale and power in a network that might have been previously underutilized. So when you think about what Alissa's trying to do at Drivers Co-op, or what Nirva's trying to do with Kinfolk, there's immense economics within the Black community for buying Black-owned brands with Kinfolk. There's millions and millions of dollars being poured into rideshare that's not being shared back with drivers. So these models where there is tons and tons of economic activity, but it's not being shared, not being redistributed, those are my favorite ones, right? Because while I love and appreciate maybe a 3-person worker-owned coffee shop where we can have this massive redistribution, that's really what makes it exciting in terms of the social movement. And I think the other really interesting trend, to Austin's point, is this whole notion of platform cooperatives, is these tech companies that are either owned by their workers or their users. And I think one of the reasons we're seeing so many inquiries from Google engineers and Facebook engineers to become part of our mentor community, or how do they form their own startups, is that the whole notion that Silicon Valley was going to democratize what was going on, I think, is obviously, that clearly didn't happen, right? And we now see the same sort of wealth consolidation in tech that we saw in the old economy. And so people are really curious about, could we actually share wealth with the workers of the company more broadly, with the users, and could we get more of that community's voice into decision making? So the short answer is it can apply to any model, but I think there's ones that it's particularly beneficial to.
Awesome. Thanks, Greg. So we're going to jump into some questions. I want to reset the room. Welcome, everybody. So thrilled to have you with us today. We're talking all things co-op. My name is Jessica Mason. I'm the co-director of Start.coop, an accelerator for the next generation of cooperatively owned businesses at scale. I'm joined by my co-director, Greg Brodsky. I'm joined by Austin, who's the founder or co-founder of Ampled, which is like Patreon, but for musicians and owned by musicians. I'm joined by Alissa Orlando, who is one of the co-founders of the Drivers Co-op, a driver-owned ride-hailing service in New York City. And I'm joined by Nirva Boursiquot, who is the founder of Kinfolk, which is an online marketplace for Black-owned things. I'm so excited to have you all here to talk co-ops being businesses that share the majority of ownership with their community, whether that's their workers or their users or other members and stakeholders of their community. And thrilled now to jump into questions. So I'm going to open it up and invite Nick Keller to the stage. Nick, welcome up.
Hey, how are y'all?
Hey, great, Nick. Welcome to the stage.
Yeah, so I just got on Clubhouse. This is like one of the first rooms I've joined, but I am starting my own company. It's an app that we're launching. So I just kind of wanted to pick y'all's brain a little bit of how, like, if my company is successful and entrepreneurial is the route that, like, regardless of this, that I want to go. So how can I make sure that sharing wealth is something that's integrated into whatever businesses I start? Because I think it's tough where, like, you want to share the wealth, but then also I wonder if I'm in that position. You also want to maintain your businesses, or you may want to expand out to other things. So how do you manage how much of your and I just joined, so if I'm like completely off topic, let me know. But how do you manage like how much of your wealth is shared and given back to people, and then how much of it is reinvested back into either that same business or maybe other businesses?
Yeah, Nick, can you give us like a 15-second of what your business is, just so people have some context?
Yeah, so the business I'm starting right now, it's an app that businesses and music artists will use to like promote themselves, and then influencers will use to get paid to do promotions. Right now, any promotions that are done, you have to go through tons of emails. There's a lot of like verifying the credibility of the influencer or the brand, and our apps can use an algorithm to make that a lot simpler. So that's like a super brief summary.
Yeah, and would you imagine that your company would be owned by the workers or the users, or maybe a combination of it, or you're not sure yet?
I'm not sure yet. Right now, we're still in the early stages. I don't think we launched till around June. We're getting an investor pulled in right now, and then the app will still have to be like finished coding and everything. So it probably won't launch until June. But I just kind of wanted to get an early start on, once this thing gets going, what should I be implementing to make sure we're not. I'm not one of those people that's hoarding all the wealth like y'all were just talking about. Like, I want to get an early start on things like that.
Could I field this with some thoughts?
Yeah, go for it.
So, Greg, one thing that you had said during like a Start.coop workshop was like this idea of just first defining what ownership is. Like the way that I've started to just think about it, it's more simply is like a proxy for financial interest and decision-making power. And so like I've kind of like begun thinking that, Nick, like there's basically like a huge spectrum of ways that both financial interest and decision-making power can be shared. Like it's on a spectrum. Like we often think about like the book value of a company, but you can think of like profits, how much of those are distributed like among like community stakeholders versus like founders. I think like the other big part of financial power that's not talked about that much is financial transparency. Like how much are people getting paid? Can you see what agreements people are signing? Like ability to audit the books, like if ability to somehow determine like an acquisition or a merger, or just like basic decision-making power could be put in kind of like any operating agreement of any company. If it's like what kind of accountability goes the other way, like how is management accountable, like what kind of say do either workers or like users in this case like have on like the direction of the product, the board level decisions. I feel like there's just so many like categories of decisions and different kinds of ways to elevate um, power that goes beyond just like picking who becomes ownership or how to share profits.
So you're saying not even just an ownership, but even maybe just like in the decision making of things, getting more people involved. Is that kind of what you're saying?
Yeah, I think that like there's room for like pretty much every company to have more democratic governance that doesn't require um, like a huge shift in ownership model. I don't know. What do you think about that, Greg or Jessica?
Yeah, I'll just add to that, Nick. Yeah, I think, we design everything in our lives, right? We design our playlists, our logos, our app, our wardrobe. And I think part of what we're trying to argue for is that why can't we design better ownership models, right? Why does it have to be, it's just a sole proprietor or the investors own 60%, that you, based on what you want to do for your company, you can design whatever level of ownership you want. And so I think the first thing to think about is, okay, who do we want the owners to be, right? Maybe you want some investors. I'm sure you want some shares, but do you want to share it with your employees? Do you want to share it with your users? That's the first thing, right? And then what percentages might you want to allocate to those communities, right? So do you want to retain ownership within the core employees and the founders, or do you want the investors to eventually take over? Where we would draw kind of a bright red line in order to be sort of called a co-op officially would be that no more than 49% of the company can be given to investors. Okay, so if you're over that 49%, you could still be what we would call a shared ownership company. There are companies out there that share 10 or 20% of profits with employees or users or whoever it is, and that's okay. You're probably not a co-op, but you're definitely sharing some of the wealth. But I think the first thing is think about, who do you want to share it with, and what do you want to give them? And then Austin's totally right. There's these two buckets of rights we talk about. One is a profit share right, and then the second one is some decision-making power. And the other point I want to make here is that doesn't mean that you're going to your community on every question. I think this is one of the big myths. We'll probably do some myth busting in this Clubhouse session. It always seems to come up. But one of the big myths is somehow that you're asking everyone every question. It could just be that you're allocating some board seats for different members of your community. So, would your company be even stronger if you had representation from your users or from your employees at the board level? 9 times out of 10 it is. But that's where I think I'd start the process. And I'll just add, we're going to be rolling out a tool. If you follow us on Twitter at Start.coop, we have a thing called the ownership model canvas we'll be putting out within the next 30-45 days. That might be a good template for you to get going.
Yeah, that would be awesome. And one, if I can ask one more, like just really quick question, and then I'll let somebody else ask a question. But I also run a nonprofit, and I was just wondering if there's something where you're not making any like proceeds off things, everything's donated. Would that be like, could you have a business model like that and then still offer people like a co-op type of opportunity, or do you think it would have to be something where revenue is coming in and like it's like a profit-based thing?
Yeah, so if you go back to the idea that there's governance rights and profit sharing rights, right? So if you had a nonprofit, you can certainly have a cooperatively governed nonprofit where giving people decision-making power or some sort of voice in a nonprofit. But with a nonprofit, there is no profit share, and no one owns a nonprofit. So I would say to be a true cooperative, you have to be a privately held company where you could have the option to allocate profit. But for sure, there are groups out there who say, hey, we just want to be a cooperatively governed nonprofit, and that's okay too. Does that make sense?
Yeah, thank you so much.
But
You got it.
Coming up, Nick.
To your point on myth busting, I also sense 2 myths that were implicit in your question, Nick. The first is that you couldn't reinvest in the business if you were doing a cooperative. And something I've learned in building the cooperative is that you absolutely can have retained earnings. You don't have to give everything at the end of every year to your members. So you're able to keep money that can be used to fuel the growth of the business. And the second is that you as a founder wouldn't be able to have any sort of financial upside in the cooperative. I think a question I asked myself when I was deciding, do I want a venture-backed startup or do I want a cooperative, is how much money do I need? If I felt like I wanted to make $1 billion, I probably wouldn't start a cooperative, right? But in my view, like I would never need $1 billion. And so around a few $100,000 or low million upside felt doable, even with this very inclusive structure.
Yeah.
Okay. Yeah. I like that a lot.
Super grateful for that input. That's really helpful. And Greg did say, if you're interested in learning more about how to think about ownership, we are going to be sharing the ownership model canvas, which we've developed. And you can, we will talk about that. What we do we'll announce it on Twitter. And our Twitter account is Start_coop. You can also find all of, yeah, no problem. There is an underscore in there. You can also find all of the speakers up here today on Twitter too. If you want to follow along on this journey. I'm at JessXDesign, as in Just by Design. Greg is at Greg Brodsky. Austin is at Austin Robey _. Nirva is at Simply Nirva, and Alissa is at Alissa Orlando. So let's continue with our conversation. I'd love to invite Saif to speak. Saif, am I saying your name correctly?
Yeah, you got it.
Go ahead. We're happy to have you.
Well, thank you so much for putting this together, guys. It's awesome information. So I came across cooperative economics while doing an internship in school, and then I think I read the work of what Robert Swan and the work that was done around community land trusts and how it really dials into the governance and ownership in industries which now I think are being polarized even more in terms of inequality and the incentives that exist. So just in terms of my thought process, I ended up working in institutional real estate investments. And as far as affordability of real estate goes, I think the urgency around that is even more and more so in this space. So I kind of am now focused on putting a cooperative platform together within the real estate space. And there are many property technology businesses that are trying to address problems of affordability, ownership, and how incentives are aligned. So my question to the group in general is, in terms of structurally how the business is incorporated or initially set up for funding and the initial traction phases, how would you compare that process to a traditional startup incorporation route? And in your experience, for example, Alissa could address that. In those early days, how would that be contrasted against traditional VC-funded startup approach when it applies to technology-based businesses? Thank you.
So in terms of the incorporation, I think it was relatively similar. There are less of these self-service tools like GusLaunch, for example, which makes C corporations in Delaware super easy. But you pay a lawyer, you ask a lawyer nicely, and you can incorporate a worker co-op in the jurisdiction of your choice. I think something that's been fascinating to me about the cooperative space is how much more volunteer help is available, because cooperatives tend to cooperate. And so that's been a real blessing in terms of getting help on the legal side around the incorporation. In terms of the initial capital, I think a major difference is that rather than talking with accelerators, with the exception of the incredible Start.coop and angel investors or funds, groups like the Workers Lab, if you're doing anything in the labor space, can provide that initial grant financing. There are a lot of grants around community organizing, like the Emergent Fund, that can provide that very initial seed capital. But in our experience, that first check is going to be for $25,000, not $120,000. And so I think a major difference is, yes, you will get so much more enthusiasm and so much talented human capital help because people are excited about what you're building, but you have to be a lot scrappier with financial resources than you would if you were a normal, or I should say a traditional C Corp venture-backed startup.
Well, thank you so much. Just a quick follow-up in terms of the equity structure that was described before. Does this model in any way bar angel investing as long as it's less than 50%? I think that was brought up before as a criterion. But hypothetically, could there be a situation where there are grants? It's a mix of the grant funding with some private capital to begin with, or are there some rules governing that differ state by state, I guess?
Yeah, so this is Greg. So nothing here precludes angel investing, right? So we've actually formed a fund for solo accredited investors and angel investors to start to invest in cooperative startups and growth stage cooperatives to help create a dedicated pool of capital. I think the biggest difference is that most of the time, if you're talking an angel investor or a VC-backed startup, what they're looking for is the big exit, right? They're looking to sell the company, and whether it's IPO'd or sold by acquisition, the goal is that we're selling ownership of the company to someone else, right? And that's how everyone's making their money. And I think the difference here is we do have some startups that want to sell within the next number of years, but most of the time, the goal is to create long-term ownership within a community, whether it's drivers or consumers or musicians. And so generally what that means is that the repayment to investors has to happen out of company cash flow, right? So out of actual revenue, not out of some pie in the sky thing. And to Alyssa's point, I think this is why it forces cooperative startups to be a little scrappier. And I think that's really the hardest part of it. But what I like about it is it forces you to be more grounded. You know, it avoids the WeWork scenario, and it does make you focused on real world sales, real world profitability. And so that can feel harder for someone coming from a venture-backed startup, but it's also what 99% of businesses have to do is, you know, live in the real world and eventually get to a profit.
Well, that's great. I really appreciate your guys' thoughts, and again, thankful for what each of you are doing. Appreciate that. Thank you for giving me the chance.
Yeah, thanks, Steve.
So speaking of the real world, I am a parent in addition to running Start.coop, and I have a child who's just sliced his finger open, and I'm going to take him to the hospital. So I'm going to drop off now. And Greg, I'm hoping you can just jump in for me and host the room.
Oh,
Jessica,
no.
I feel like you've had
okay.
multiple ER visits over the last year. Oh my goodness.
It's always the same child, but I'm wishing
Okay.
everyone an amazing conversation. Please stay in touch with us at Start.coop.
Okay. Good luck, Jessica. Oh my goodness.
Make Greg a
Okay. Well,
moderator before he leaves.
yeah. Well, we're gonna wish Jessica luck. All right. Next up, I think, is Greg. You're up.
Yeah, I think Jessica needs to make you a moderator, Greg.
I will do that.
Great.
I'm going to figure out how to do that.
Well, anyways, thanks for holding this space. Appreciate it. This is Greg Fleischman, and I do natural CPG, brand creation, investing, and things like that. And I'm so thankful that you're holding this space because it's my favorite topic these days. I feel co-ops are going to save the world. And I got a question here, but my comment was I think people just don't know that there's so many co-ops out there like Rabobank or Natural Co-op Grocers or Equal Exchange. It's such a fantastic way to redistribute wealth. So my question for you, for anybody really, but if Jessica's dropping off, then for Greg or maybe Alissa, because she touched on it, have you curated a list of investor groups that are really focused on funding co-ops? And in there, do you have Blackstone Group, the Walton Foundation, Google Ventures, and Bill Gates Foundation as potential sources of funding for these new types of business models? Or not new types of business models, but new businesses?
Yeah, I'll take a stab at that, Greg. Thanks for the question. And Alissa and Austin and Nirva, please feel free to jump in on this. So we have started to. So Jessica's actually started to curate an investor matching tool. If you follow her on Twitter, to match startups to investors. And it's also the main reason we've created the Equitable Economy Fund to give a dedicated vehicle for people who want to invest in growth stage cooperatives. But it is harder. I would say most of the financing that exists for startups is really more debt, i.e. loan funds. I think the early stage equity funds it's kind of a gap in the market, to be honest. And it's something we're aggressively trying to fill in. I think it's one of the things that makes it hardest. The other tension, just going back to my comment earlier, is that most of the time a venture fund is looking for its return within 10 years, right? Again, predicated on that exit. And so, if we're paying people back out of revenue or out of profit, it's harder to force that exit within 10 years. So we need different models. So one of the things we're actively looking at is there's a number of startup funds who are using revenue-based financing, where the proceeds come back to investors out of actual revenue. And we think that's a better model, but it's a newer model, and there's just not as many funds that are using that yet. Austin or Alissa, you want to chime in on that, or Nirva?
Greg, I think that no one else would know better, like, the challenges of fundraising in the space than you would. I think all the entrepreneurs here probably have our own stories. And yeah, it's definitely tough. I think that's one thing that maybe was like a false assumption on my part, starting, just thinking, well, I would assume there's probably like a pretty rich ecosystem of people looking to support cooperatives, but the infrastructure just really isn't there. And I don't know what the solution is. I don't know if it's like that, like Indie VC just went under, right? I don't know too much about that, but I think they were the only VC firm to ever invest in a co-op in Savvy, which is like the first cohort of Start.coop. And what was the problem there? Like, I guess they didn't find enough supportive LPs. Is it just like, I wonder what the solution is. I feel like Start.coop is like pushing forward on that with like the stories and the examples and like bringing investors in to just like do LPs just need to expand their imagination a bit?
I think they need, I don't know if it's about imagination. They need to relax a little bit on the greed and the money grab going in. Do you really need another Ferrari, or can you handle a Tesla or something? So I'm being kind of a little cynical there, but whoever, Greg, Jessica, Start Co-op, I think is genius, by the way, just for, anybody who's looking, because there's so many different types of co-ops, so they should start with you so they know which one to get in, and they can model off other co-ops that exist that have been successful. On the funding part, maybe we could all get on an email chain, because there are, like I said, Walton Foundation, Blackstone, these are multi-billion-dollar funds, and they've dedicated 15% of their funds for impact investing. And this should follow on that. It's not like they're going to go give you $100 million to start a community-based co-op, but $500K, $1 million there, that's a start. And they're in it for the long haul. They're not going to be in it because they want to 10x their return. So maybe we can get on an email chain, start bringing those folks into this picture so they can get behind these types of models.
Yeah, thanks for that comment, Greg. If you follow Jess and I on Twitter, I think we'd love to, anyone who wants to talk about co-op financing, I will say it is the number one inquiry I get. So I'm probably on 2 to 3 calls a week with people who are trying to figure out the new model. And there are, I just want to let people know there are 4 loan funds that all they do is co-op financing. So if you go to Start.coop and you look for our additional resources page, they do a great job. It's just that it's not equity, it's loans. And a lot of that, historically, just a really brief backdrop, back in the day, if you created a co-op, there was only one shareholder class, right? So if we just use a consumer-owned grocery store, because it's the model most people are aware of, those were the only equity shareholders. And what's changed over the last 15 years, but the financing has not caught up, is now we can design ownership to be whatever we want it to be. So we can say, hey, we're going to have a worker class, right? We're going to have a consumer class. We're going to have a class for the founders because they want to be rewarded. And we're going to have an investor class. We're going to allocate 25, 30, 40% for investors. But the financing vehicles are not there yet. So it's something we're pushing really hard on, and we'd love to talk to anyone who wants to talk further about the innovations we're looking at. But
and
it is the hardest part. Yeah.
And to elaborate on this point around debt financiers, so when we went to big funders that have those patient timelines that you're describing, Greg, their response was, oh, check out these 4 co-op loan funds that we've invested in. They're all community development financial institutions. So we went to those organizations, and that actually is where we got our initial round of financing. But those conversations felt like fitting a square peg into a round hole sometimes, because they mostly do conversions, which is where you have a sole proprietor or partnership business that you're then converting into worker ownership. So it's more like a private equity model where you're like, okay, show me your historical financials, show me your financial ratios. And as a startup, we're like, we don't have historical financials, or there were very specific financial metrics that were asked for, like what would be our cost of customer acquisition? And we were like, here's our model. I have no idea if this is correct. Like we got to try and go acquire some customers and see what happens. And so I found that that was a real tension, whereby they are set up as loan funds to get 5 to 11% APR on something that's actually much higher risk. And so how can you have financing where the investors are getting appropriately compensated for the risk that they're taking, because it's not buying a profitable business with historical steady cash flows, but rather like a business that is either going to 10x or fold. And I find that a lot of those institutional investors giving to co-op debt financiers have structured those investments in a way where financial investors don't get any significant meaningful financial upside, and therefore it's difficult for them to take meaningful financial risk.
I want to quick. Sorry.
Yeah, go ahead. And then I want to make sure we have some more questions. Yeah, go for it.
Yeah, I wanted to. So great question, Greg. When you mentioned Blackstone, I thought that was very interesting, right? Because we personally, with Kinfolk in our group, in our community, we've had several conversations with that group, and that has never been mentioned. So I think that's very interesting. We should definitely do a follow-up chain on this. I think the question then becomes the willingness for our society to change, right? It's a radical model, and there's a lot of unknowns, and like Greg says, right, when you take venture capital funding, it's usually there's an exit. Most people don't talk about that. For us specifically at Kinfolk, we have had a very clear identity on the problem that we're solving in the community that we're super serving. So we have gotten very creative, and it's a non-negotiable for us when it comes to equity-free fundraising. So there's a lot of ways to skin the cat. So it's just a matter of like how quickly is society willing to change, and also finding folks like Start.coop, which is heaven sent, right, that are willing to have the conversation, create space like this for us to do that. So Austin, I want to give a shout out. He has a really great article about some of this that we're talking about right now. It's equity-free fundraising and just all the folks that are out there doing the work. So tap into that too, and that's been super helpful for us too when we started off on the journey and figuring out how do we come into this space and super serve our folks and not have any trade-offs with our mission, right? So it's non-negotiable when it comes to equity for Kinfolks per se.
Yeah, thanks, Greg. I want to make sure we get to a few other speakers, but I also just want to give a shout out to we have a few people in the room who are actually investors in this new equitable economy fund, and the goal is to start to be that early stage equity financing that doesn't really exist today. So we've had 22 accredited investors step up to try to get a baseline fund going, and it's very small right now, but you got to start somewhere. And so, if you come across people that want to support this space, would love to have that conversation with them. Okay, let's move to Philiana. Am I pronouncing your name right? I imagine.
Hello. Yes, it's correct. Thank you very much, everyone, to invite me here on stage to share with you guys. I'm very interested with this subject, cooperative startup, recently, and then I'm very happy to see that there is a group like this. I basically would like to know how we can create like a cooperative startup when actually we started as a normal, in a way, startup. How if we want to switch our startup in a cooperative startup. So it's very pragmatical question from my side. And then secondly, maybe it was already handled by some of the previous question, like Alissa's questions, that how about the investor? I mean, do they rather like underestimate like a cooperative startup rather than a normal startup, or is it okay right now? Like, I'm really like interested in this subject, and I would like to know some feedback about this. And me myself, I'm creating a startup now that is kind of collaborative startup to a delivery pool in order to get the free and greener delivery. So I really would like to create a cooperative startup with my startup, because I think it's a better vision for the value of my startup. It's really like in a line of our core value. Yeah, thank you.
Yeah, Philiana, can you just repeat your actual question one more time? We appreciate the comments, but tell us the
Yes, I
question one
would
more time.
like to know how to create a cooperative startup if we already create our startup in an ordinary startup. I mean, like I created my startup already, and it's not a cooperative startup yet in
Gotcha.
terms of yeah. So how I can pivot, or how I can like change it into cooperative startup? What is the way? It's rather pragmatical, so that I can learn how to do that, and I can do that like apply it if it is possible to my startup. Thank you.
Gotcha. Austin, Nirva, Alissa, you want to take that? If not, I'm happy to jump in.
Is it incorporated already, or have you raised money?
Not yet. We are about to raise our first seed money on July, and today we have a small investment from Indeed Love Money. Like we already opened our equity part, but very small part for the Love Money, and then our first fundraise, it will be this year, second semester of this year. Thanks.
I'm trying to think of the things that make it impossible or prohibitively difficult to start a cooperative. And I feel like sometimes that's going through doors that are hard to walk back from. Like sometimes it's ways of raising money, right? If you sell equity to investors that have a specific kind of expectation, then it's probably hard to go backwards. The incorporation of legal stuff isn't as much of a challenge as, right, is like what kind of expectations among stakeholders are being set. I think specifically around people financing it.
Yeah, Austin. Yeah, go ahead. I'm sorry.
No, that's pretty much all I was gonna say. Is like if you're seriously considering a cooperative structure, then you should probably hit a hard pause on the existing fundraising strategy that you have, because it might be just completely incompatible. I don't know. Any other thoughts on that on the stage?
Yeah, I think you're right about, once you raise some investor cash, and look, you've signed a contract with them, but there's also just some expectations, right? And so, it becomes much harder once there are investor expectations of a certain strategy or based on a certain valuation. So it depends what sort of term sheet you signed. Is it equity? Is it a convertible note? How you're set up. So I think we can recommend a few lawyers to talk to if you follow us and DM us. Jason Weiner, who's a lawyer out of Colorado, is really one of the innovators in the space. He's excellent, but it is hard once you have some traditional investors in, because they're looking for the terms that you signed them up for, and you're kind of changing their narrative on them, right? So it is hard to go backwards, to Austin's point. It's not impossible, but you'd have to figure out, can you convert them into this new structure? And then the one other option is that even if you couldn't be a kind of a full worker-owned or consumer-owned company, you could allocate some percentage to that community, is another way of thinking about it. So could you carve out, 10 or 20 or 30% for that community and say, we're going to put a cap on how much we sell to investors essentially, and start to bring in this other community in terms of a profit share and a voice, going back to those two main components of cooperative ownership.
Okay, well, thank you very much. I would like to know, how we can get, the financing if we are not raising money for like a cooperative startup. Is it only like by crowdfunding, only like love money and stuff? Because if you say that it's difficult when we already getting an investment to come back to a cooperative startup because they might have some expectation and stuff, and there is no such maybe cooperative friendly investor. Maybe I'm a little bit naive, but I am really new in it, so I would like to know all of this matter to really considering how I can do these things. Thank you.
Sure. Yeah, and it is harder to find co-op investors, there's no doubt. So I think, it's probably the biggest reason not to be, I would say, is that it's harder to find that capital. It's not impossible. Alissa and Austin and, I think I've already figured out how to bring in some money, but it's not as easy for sure.
It's also, not even, it's even less of a question of like fundraising strategy and fundraising tactics as it is like this religious question of what the goal of the company starting even is in a lot of ways. I think when we at Ampled kind of made the decision to become a cooperative and start as a cooperative, the goals of a startup become very different from what any traditional early stage tech investor would want, where like the goals are actually to serve people's needs rather than to create an exit. So like, I think like at a philosophical level, it's worth like reconciling just what the goal of the thing is. If you're going to spend 5-10 years possibly or more of your life working on this, like just think about like why, I guess. I think like, yeah, it just goes deeper, I think, than fundraising, which is like a way to enable the end goal.
Yeah, well said, Austin. And I'll say, even folks in the accelerator community, there was a nice article about the founders of Y Combinator the other day and what some of their learnings are. And they say, some founders start to think that the investors are the customers, right? And they're not. The end goal is not just to please investors. Austin, you're absolutely right. It's like, what are you trying to do with your company? And that's a personal decision. So I think, Doctor, you're next up on stage.
Hey, thanks for having me up. It's interesting when you're looking at these tangential ways to be able to either work with a cooperative / hybrid nonprofit / for-profit, and those, both cooperatives and nonprofits, from my understanding, they can engage in a wide variety of business activities. And, that can be in the form of joint ventures, partnerships, licensing agreements, franchises, royalty agreements, participating leases, land building and development, a whole variety of things. And what I'm looking at is a hybrid structure to where it's like a cooperative commonwealth. So you've got your for-profit company that you've set up, and ultimately everybody has a goal, or a percentage of humanity has an interest in this concept of like a cooperative commonwealth or a solidarity system, that non-hierarchical or non-exploitive, equitable set of relationships, whatever it's geared towards, whether it's indigenous or participatory or human needs or humane, or, could just be ecological and sustainability, is that you organize, like, for instance, TriSed Community Recycling. They're one of the largest community-based recycling entities in the state of California. 25 years now, Hayward, Union City, highly successful. They've given jobs to all kinds of amazing people that would normally not get jobs. And they're very lean in their manufacturing and their whole process. Everything's running on natural gas. They're trying to do everything on the up and up. What I'm wondering is, what do you guys see could be a hybrid model to where you could actually set up a cooperative commonwealth to support your for-profit so that you're giving, in a sense, a workers' union or a workers' opportunity or a value back to the community or the suppliers and surplus that are providing you your whatever product it is you're producing. Because from my understanding, one of the biggest things with nonprofits or cooperatives, like she was, I forget her name, she had said, you go out for funding and they're like, here's a $25,000 check instead of 125 or whatever. And it seems like all the research I've been doing for some of the brands that I'm helping to start up right now, if you put in, like, say, Atlanta and Community Advantage Loan, or you look at, some of the VSMBX models or some of these mission-based lenders or the CDFIs, that if you were to go to them and say, look, we're going to be setting this up, and just out of the gate, we want to set up this entity that we are going to be, and if you ever sell that for-profit company that's working with that cooperative, that it's beyond B corporation at that point, because that's just a bunch of stuff that's put into your bylaws. No one comes from the B corporation if the owner gets slashed and burned and bought out scandalously. No one's there to like raise a red flag and support you because you're a B corporation. This would actually be an installation in connection to a for-profit company that if you did sell, your packaging and your partners, it's basically written in stone that this is where your supply comes from and this is where your product gets packaged, or these are the relationships that you have that support that for-profit entity. So investors could get involved in either side, one for write-off and for the impact side of it, and the other for, the benefit of gaining profit. Does that make sense?
Yeah, I think so. So, Doctor, so let me just reset the room for everyone. So we are in cooperative startups, the what, the why, the how. And before we answer your question, let me just re-intro the speakers. So Nirva and Austin and Alissa, can you guys just re-intro yourselves?
Yeah, I'm Nirva Boursiquot. I am the founder of Kinfolk. We are 100% Black and consumer-owned marketplace focused on working with Black creators and innovators to highlight resources that we use today. It's all about community and collective ownership for us. So we're owning the things that we hyper-consume. I'm super excited to be here. Thank you for the opportunity.
I'm Austin. I'm a co-founder of Ampled, which is a cooperatively owned web platform for direct community support of musicians. So it's kind of like a Patreon for musicians that's collectively owned by the artists and workers.
I'm Alissa Orlando. I used to be head of operations for Uber in East Africa and quit over their treatment of drivers. And I'm now one of the co-founders of the Drivers Cooperative, which is a driver-owned ride-hailing platform launching in New York City. We charge lower commission, have due process rights for rider complaints, and share profits with drivers.
Great, thanks all. And I'm Greg Brodsky, founder of Start.coop. My co-director Jessica had to step off because her kid sliced her finger open. So Doctor, let me just very briefly answer your question. And I'm recognizing there's a lot of other people who want to ask questions. So we'll do a better job getting people to the front of the stage. Yes, you could design whatever structure you would like to design. I think there are so many opportunities here. And often what I tell people is, look, I don't think any business has to be a cooperative, right? It's certainly much easier to be an LLC, but I've never seen a business that can't be a cooperative either. So I think it's just really a question of what you want to design for your community or what the founders you work with want to design for their communities. And you can put in whatever protections you want around mission and ownership and governance. And I think it really comes down to an individual decision. And what all of our cooperatives have in common is this notion of how do we share the wealth with the broader community? How do we share voice with the broader community? But I think the specifics of what each one does really look different based on what each community is trying to do. So I hope that helps. And would love to follow up with you offline if we can talk further.
Yeah, I'll ping you offline because it directly correlates to, and I'll follow up with you offline. I look forward to it. I looked over your website. It looks like great organization. And we're currently working on just that radical transparency with supply chain. And I'm trying to figure out how to do that in a way that's not considered neo-colonialist because you're working with people in other countries and that you're literally joining forces with them and figuring out what their needs are. And then, like we develop farmers unions on all of our projects, even though they're not cooperatives, because we want the farmers to have a voice. And yeah, I look forward to speaking to you offline. Thank you for your time.
Yeah, thanks, Dr. And I'll just mention one other resource. There's a parallel model called a purpose-driven company, or sometimes people call it purpose ownership. But if you look at purpose-driven company, that's another way some companies have figured out how to instill kind of like a trust at the very top. It's a little different in cooperative ownership, but it solves for some very similar things, where it's a trust at the top that's set up around a particular purpose, so that you can lock in some of the things you're trying to do. So happy to talk to you offline. Drew, welcome to the stage. Let's try to keep people to 15 to 30-second questions, just so we can get more people to the front. But what are you thinking about?
Hey guys, thank you so much. I'm extremely excited about this room. My name is Drew West, and I'm going to practice something I'm a big fan of, is start with your question first, and then if you need more info, you can ask me about it. So my question is a cooperative startup model incompatible with a company like Clubhouse that's like high growth and probably requires venture capital to be successful?
Entrepreneurs, I think this is all you.
The question is the kind of fundraising for co-ops incompatible with like venture scale? Did I read that correctly?
Yeah, I'm insanely interested in building a startup that is, by my definition, cooperative, meaning everybody owns a piece of the pie. Is a vision like that incompatible with a startup that is going to require, a lot of venture capital? So, if you took Clubhouse as your model, do you think Clubhouse could have, achieved success and also worked within a cooperative model?
I think yes, but I think you'd have to have like a completely different approach and emphasis on labor rather than financial capital. This is my opinion. Like we've been the way that we've been able to build Ampled, which is a pretty simple product, is with I guess like over 20 people now working to help build it on equal standing with each other. And I think by like setting this culture, this like camaraderie of working together, we've been able to build a working product and actually like bootstrap it to a place that's a working, growing product with like a rich social context around it and functioning governance system. So we've come up with a time bank to measure the hours that each person is putting in. And there's still a lot of unanswered questions for, like how to reward sweat equity. I think it would require like being inventive for sure, but I think it's totally possible. I think like leveraging collective labor, or just thinking that as like the first step, is a way to reduce the need for fundraising in the first place. Like maybe you just don't need the kind of money that venture capital would typically provide, because there's already 50 people working on it. Would that work for every project? No, probably not. But it's at least a roadmap that we are trying to prove out right now.
Thanks, Austin. Go ahead, Alissa.
I think if you're fighting the capital game, you will lose. So, I mean, our competitors are Uber and Lyft. If we went in there and we said, hey, drivers, we'll pay you $50 for your first 6 rides, or hey, customer, your first 5 rides are free, or your first 5 rides are 20% off, we're absolutely going to lose that battle, because as we discussed, we're not able to raise capital as quickly in the same volumes. But just to give a very concrete example, our driver cost of customer acquisition, including our customer service team to collect all the documents to activate every driver, was $12. Uber and Lyft, and these are all in public financials now that they're public companies, are $650. And so if you're able to use that people, able to use that goodwill, able to use partners, able to use volunteers, I actually think about building an at-scale co-op way more like doing a political campaign. if you think about it like doing an at-scale political campaign rather than building a venture-backed startup, I think that's a much better parallel in terms of how you attract and spend resources. And there are at-scale non-venture-backed tech platforms, Signal, Wikipedia, just being some examples. And those are what I really look to for inspiration.
I mean, Zapier has not raised any venture capital, and there was a huge article about what their valuation is right now. So there are definitely examples of it. But Nirva, what do you think? We haven't gotten into the conversation very well.
Yeah, no, it's okay. So I mean, it goes back. I think everyone had some really good points. To Austin's points, for me, I would take a step back and I'm thinking, okay, well, who are we servicing, right? If we look at just how many folks are on Clubhouse today, my question becomes like, what would the world look like if we were to give, distribute equity amongst the people? So it's really, for me, it's about shifting the perspective and retaining that value and control among the participants. So, the mission and the narrative changes. So it's definitely doable. It's just, it's going to look a lot different than what we've been trained to do. So it's just, I mean, we can get very creative here, but I would say the answer high level would be yes. And there's definitely a lot of people who, if we educate them, would be interested in what would the world look like if we were to distribute that equity amongst the people and the participants, and to be successful. It's that's my initial thoughts.
And Drew, I'll just give you one other perspective, because I think it's such an interesting question you're raising. In my experience, what happens with cooperatives is they do take longer to scale, right? They don't have the access to outside capital that a VC-backed startup does. But once they get there, they tend to have deeper roots and last longer, because rather than some frictionless app that you have no connection to and you replace tomorrow with the next app, right? What you're really offering people is ownership, right? And in this era where loyalty can be as thin as a dime or as thin as whatever the new flashier app is, ownership can be the ultimate differentiator if you position it properly. To Alyssa's point about you're creating a culture and almost like a political movement. While it may take you a little bit longer, in the long run, in my opinion, you will have a stronger community and actually a more vibrant business. Thanks for asking the question.
Fantastic. Thank you so much. If you're willing to, briefly answer one more, I wanted to know, are there leading voices in, this startup co-op space? Because I'm, just thinking about it on my own. This is the first time I've discovered other people that are interested in this. So, are there people that you would point to say, like, these are the leading voices that we're following? And then also, if some of you guys want to connect offline, I'd really be happy to have, like, an in-depth conversation about some of these ideas.
Sure.
Greg.
Austin, who are you following? Oh, thanks, Liz. Besides me, who are you guys following? Who else do you think is good?
I mean, so Greg, Austin, Jessica, Alissa, definitely tap into resources such as the SELC.org. Amazing. I would read Nathan's book, Nathan Schneider. He's amazing as well. Collective Courage, Dr. Jessica. I think the SELC is definitely a good point of reference. Myself, would love to connect with you. Great question. Hopefully that helps.
And Drew, if you check out the additional resources page at Start.coop, we list the cooperative loan funds and all the national associations who are working on this. Thanks, Drew.
Thank you.
Waleed, welcome to the stage.
Hey guys, thanks for having me among you. So my question is more towards the entrepreneurs with regard to a financing issue than really about the cooperative model. So we have raised $1.5 million in equity to launch a student financing product where we finance students in exchange of their future revenue for a limited period of time. Some of you have heard about income share agreements. And this is equity financing, which means that we are going to use this money to develop the product, recruit the team, do the marketing, sign the partnership. And despite signing some pretty strong partnerships with the schools, and we are having one of the best social impacts you can have out there for your dollar value of money, we are facing a big challenge post-COVID crisis on how to attract the first big ticket investors. So you need that first 1 to 2 million in debt, in venture debt, where someone is going to take a huge risk from a technical point of view, so that you can open the doors of the institutional financing. And I wanted to ask if in the room there are entrepreneurs that have came up with alternative kind of street smart ways of launching that first batch of financing without necessarily going to the big VC fund that is going to give you that million in exchange of 12% interest rate. Thank you very much.
So Waleed, I'm not 100% on your question how it relates to cooperatives. Is your question really just around the opportunity to raise debt versus equity?
Yeah. I mean, like this is why I precised that at the beginning, because when I joined the room, I noticed that some of the speakers were talking about the social impact and how to avoid big VC funding with big APRs to pay. So because the cooperative startup is I would guess a social inspired type of business model that you would run with a company. On the other side, we're a company that is trying to put forward more of the social returns than the financial returns while raising debt.
Gotcha.
And I just wanted to know if some of you guys were confronted into this type of situation where your first investors will need to come not for the financial returns, but for the social returns. Thank you. I know that the question is a bit tricky, but if you have anything that is of a solution brainstorm, I would be happy to hear.
I mean, this
Yeah,
is Nirva.
go for it.
Oh, sorry. I was going to say, so for us at Kinfolk, we've bootstrap, and so we definitely lean into our social impact, but we're being intentional about, raising so early on into our journey. And I think this may be a good question for Austin, because when we started, we actually read a lot of his stuff to figure out how we wanted to do that. But it's bootstrap, and Start.coop would be our first initial investment. So we're super excited about that. And Greg and Jessica have been great to just talk through how do we do that. But again, it just depends on what you're building. And like Greg mentioned, cooperatives, it's something new. It's a radical model. It's not something, again, to Alyssa's point, like, $1 billion, I'm not sure about that. Maybe, a couple $100,000, million. So again, it just depends on what you're building. But for us, we've bootstrapped, and we've looked at equity-free fundraising methods to sustain our business.
I think with Ample, we kind of haven't really pushed investors that I think purely have a financial or who are purely interested in a financial return. So we haven't really tried to convert people. I think like our fundraising strategy, if you would call it that, is just more opportunistic. It's like we've gotten some money from friends initially. We've gotten some grants here or there, and an investment through Start.coop. And all those people are really excited about what we're doing, and which has made things much better because we have, people that are understanding that we're experimenting and figuring something out. And really just like focus more on building it than fundraising. Like very little of my day is spent thinking about fundraising right now, and more of just building it. But I think that I don't know. I'd be interested to hear Alissa, what your experience has been like for fundraising. Has it been just through CDFIs and Start.coop so far?
Yeah, so it's been through CDFIs. And what's so interesting is I feel like the level of financial rigor and assessment for a co-op investment was head and shoulders above the level of financial rigor and assessment for convertible notes from venture funds. For convertible notes from venture funds, it was like, hey, you go to this school, we heard you at a pitch event, we're going to have a quick call, okay, here's your check. For debt funds, we had to work for that money, but it was good work. Like we had to produce financial models, we had to justify all of our assumptions, we had to do NPVs, like imagine, and so I wouldn't want there to be this thinking that just because someone is interested in a social mission, there is no financial rigor. I actually found the exact opposite when pursuing capital for a cooperative versus from venture funds.
Yeah, and just a vernacular check here. So when we say CDFIs, what we're talking is community development financial institutions. So these are community and also sometimes national loan funds. So there's hundreds of these across the US, and some are huge. Some have $1 billion in their portfolio, and some have $25 million in their portfolio. But it is a source of debt financing for a lot of social impact businesses. Some of them have a very specific interest around housing or food or jobs, and some have geographic focuses. But if you want to look at those as an option, you can go to a website called the Opportunity Finance Network, and it's essentially a locator of all of the CDFIs that are out there. And it's absolutely worth looking at, I would say, in general, for entrepreneurs, because their cost of capital, because they get a lot of capital from the government, their actual cost of capital might only be 2 or 3%. And so they can put loans out there that are oftentimes at the low end of the market rate. So they're good aligned lenders if you want to check them out, Waleed.
Thanks a lot, Greg, for that. The name of the website is the Opportunity Financing Network.
That's right. Yep.
Okay.
Or
great,
if you
great.
look up CDFI locator, it should get you to the same place.
Great. I'll take that advice into account. Thank you very much for sharing the advice.
Yeah, you're so welcome. Good luck with the business.
Thank you. Goodbye.
All right, Jenny, welcome to the stage. Just to reset the room, this is Cooperative Startups, the what, the why, and the how. We'll spend at least another 5 minutes in, and then at some point my wife might tell me our kids need attention, so we may have to close the room, but let's see how many more questions we can get in. Jenny, tell us your name, what you're doing, and what your question is.
Sure. Hi, guys. Thank you so much for this really super awesome room. I'm definitely finding this super valuable, and questions have been awesome. So I'm, mostly mom, but also in the education space. I'm doing all sorts of interesting things with alternative schooling and homeschooling and so on. My question is about governance to those of you with co-ops on the panel. I think it's probably all of you. How is the decision-making process done at your particular co-op? And, do you find that as a big plus over having a nonprofit type board structure? So yeah, thanks.
Thanks, Jenny. Awesome. I'm going to kick that to you because you guys have really done some really innovative things over the last year for governance.
Yeah, so it's one of the most common questions that anyone coming in to the community would ask is like, who makes this decision? How is this decision made? And our way of thinking about it was to make a table of decision making that could be transparent, so everyone would know kind of like what, I guess, who would be responsible for any given decision. So what we did was, one, just write down every decision that someone would make at the company. Then we kind of like outlined who would be primarily responsible for making that decision. Could be like a person or a group of people. And then what kind of decision they would use to make that decision. So it ranged from like, a delegate, someone's just like in charge of making that decision on their own, to consulting, like, getting consent, like absent of strong objections, this is how the decision is getting made, all the way to like democratic majority, supermajority, or consensus, like something that everyone has to agree on. And so we drafted this and actually elected a board of directors of our members. So we basically have like this representative democracy, and our board of directors is auditing this decision-making table right now, and Jessica's actually on the board doing this. So we kind of like made some assumptions, made a table that just like described how all decisions would be made, and then brought in kind of like elected stakeholders to have like more perspectives audit this thing. So the end result is basically like we have a pretty clear idea on who's making what decision and how they're making it. And it's very like personalized to our business. Like there are specific decisions that some stakeholders care about. Some would can't be bothered to even think about some of these things. Some really want to say in certain things, and some just trust kind of like day-to-day decision making to be in charge of like management or workers or something like that. So we haven't really adopted like a specific decision making like school of thought or pedagogy. It's just been us writing it down in whatever makes sense to us.
Thanks, Austin. And I'm just going to contrast that with Alissa or Nirva. Can you share when you go to your members, because you both have sort of a management team, even though Nirva, with you, it's still fairly a small management team. What kind of decisions you're just making every day and when you want to go to your community?
Yeah, I can tap in. So yeah, our team is fairly small. Again, we just entered the marketplace September of last year. And just to make sure I understand the question, you just want to know how we make day-to-day decisions and when we go to our community, like what we go to our community for. Is that accurate?
Yeah.
I can clarify. Yeah. So, Nirva, if you can just talk to, I'm curious about how various decision making happens at your co-op, and whether you have a board. That's also helpful for me. Thanks.
Yeah, well, in the spirit of cooperative world, being fully transparent, we are fairly new to the game. And so one of the things that we are super excited about is teaming up with Start.coop to sort all of that out. We have some framework as to what we envision that to be, but Greg and Jessica will certainly be on the journey with us the next few months to just hash that out. So can't speak to that 100%. Today, the day-to-day decisions, high level, figuring out, okay, like, what community, what platform we're going to host our community on. We do lean into that with our co-op members. We have one-on-ones with them and just say, hey, this is what we're working on. How can we super serve you, right? So we did that to figure out, okay, we're going to have everyone on Circle and we're going to congregate there, right? Versus doing it on Slack, and there's a whole topic on that. But some topics like those, we lean into our community, and we, radical in our approach of, sitting down and having 30-minute calls and figure out what works and what doesn't work. And then the high level stuff I sort out through, and then also really lean into having some advisement from Jessica and Greg to figure out, okay, is this the best route until we build out our team. Hopefully that helps.
For us, we wanted drivers in leadership positions from day one. So one of my co-founders is an active driver as well as a transportation professional. But we had this unofficial driver board who we meet with every week. And we actually just accepted applications for the formal driver board. So we'll be having our elections on that where thousands of drivers will vote for 18 drivers who will set customer service standards, set membership requirements, and hear deactivation cases. So for example, if a rider said that they were hit in a vehicle, is that true? Is that not true? That would go to the elected driver board. Another tip we got is in our bylaws, we basically said decisions will go for membership vote starting in May. So that gave us like 6 months to basically have management make a lot of decisions just to set everything up. But it was in the bylaws from day one that managerial discretion would be limited to a certain time period.
Jenny, I hope that answers your question. And I just want to point out, it really depends on what kind of co-op you're creating, right? So, worker owned co-ops might be more inclusive in decision making. If you're talking a consumer-owned co-op like, REI, certainly REI is not going to every consumer every day and saying, what should the pricing be in the retail store? So, it really does come down sometimes to who the owners are and sort of how big the co-op is. And often what happens is as the co-op grows, it can shift from a more sort of integrative democratic decision-making process to more of a representative decision-making process. But hopefully that helps you a little bit.
Perfect. Thank you. Thanks, everyone.
Yeah, thanks so much for the question. Alan, welcome to the stage. We'll take just a few last questions here. So tell us your name, your role, and what your question is.
Hello, everyone. My name is Alan. I'm tuning in from Los Angeles, California, better known as Tongvaland. And my role is really, I take that of business development. And I am very grateful for you all, moderators, for I don't know how many times you've created this room, but this is the first time that I see it. And I'm very excited because 2 years ago, I had actually found this resource called platform.coop. And I was looking into what new ways we can use or frameworks to launch a platform. Whereas, as you, someone had said it, where there's less of a focus on the new platform kind of coming in and taking traffic away, but rather there's this sense of unity or even culture, shared culture within a platform. My question is around fundraising, and one of the things that I've noticed as a, let's say, private for-profit entity is that you could now do equity crowdfunding, and then compare that to going the 501c3 route, where there's now where there's always been tax incentives for people to donate to a mission. My question is around just really finding clarity around if I'm very much interested in that platform cooperative model, and if equity crowdfunding works with that, or kind of going the nonprofit route and still doing it as a cooperative with the cooperative governance in place would open up opportunities for different ways for funding, mainly around equity crowdfunding. Hearing your thoughts if that works for cooperative startups, or is the ownership given in another way, like I heard voting. um, More ideas around that, and also any learning resources. I'd love to keep diving into this. I have already started co-op in my tabs, so I'll be reading into that. But thank you so much for this space.
Yeah, thanks, Alan. And just for clarity, is the co-op you're starting consumer-owned, worker-owned? Who are the owners of the cooperative?
Yeah, it would be the merchant owned, kind of like Etsy.
Mm-hmm. Great. Yeah. So I'll dive in, and entrepreneurs, please feel free to add your thoughts. So look, fundraising is really the hardest part. I don't want to say the hardest part, but one of the most complicated part of any startup, right? Whether you're cooperatively owned, LLC, sole proprietor, it's really hard to get other people to raise money. So I think the first thing to start with is, what is the vision of the company? What is the business model? How do you make money? How do you grow your community? Being really clear about the problem you're trying to solve, being really clear about what is the competition in the space. And I think having clarity around that, right? Like, how do you actually get cash into this business is really where you have to start. I think sometimes there's a myth, just to bust another co-op myth, that cooperatives don't have to raise money. And as you saw in this conversation, many cooperatives do, just like any other business. But I think once you kind of get to some clarity around that, that will help you figure out what your fundraising strategy is. And what I mean by that is, if you are a business that appeals to consumers, where you think there'll be some actual profit, I think crowdfunding and being a co-op could be a great model. If it's a business where you think there's not going to be a lot of profit, I think a 501c3, if there's not going to be profit to distribute back to your members, then a 501c3 nonprofit is the way to go, right? Like the benefit of being a co-op financially is that you can actually distribute dividends to your members that are, and they're not taxed at the corporate level, which is a huge benefit to avoid double taxation. But if you don't think there's going to be a ton of profit, then you might as well give your community the option to make donations on a tax deductible basis and go the nonprofit path, is my short answer. I don't know if anyone else wants to chime in on that question.
Hey, I actually got to run really quick, but I just want to say thank you again, Greg, Jessica, and Alissa, and Nirva, everyone on stage. It's great talking to y'all, and I hope to connect more specifically with Nirva and Alissa. So I got to run, but I just want to say thank you, and thank you to everyone else as well.
Thanks, Austin.
Bye, Austin.
Bye.
So we were talking about like guerrilla warfare tactics earlier and how you compete as a co-op. And I think crowdfunding is an awesome way to do it. So for Giving Tuesday, we did a $25,000 donation-based crowdfunding campaign. And when we're thinking about our next equity raise, we're very much thinking of using a crowdfunding platform. They do charge 7% on all funds raised. So that's a a bit of a bitter pill to swallow. But I think the more ambitious your co-op is, you know, like when we say we want to create a driver-owned Uber or Lyft, like people get the ambition behind that, and people are willing to give $10, $25, $100, $500 to prove that there is a more equitable way to have a ride-hailing platform, by way of example. And so I think if you're able to articulate just how radical and how ambitious and how transformative your business would be, these crowdfunding platforms treat co-ops well vis-a-vis like another productivity software tool. I think it's something that people get excited about, and therefore they perform well in crowdfunding platforms.
Alissa, thank you for your input and thank you for your leadership. I actually drove for 3 years for Lyft, and I'm very much interested in just learning more about what you're doing in New York. I have family there, but I'm here in LA and California. But yeah, thank you so much for your input, as well as Greg.
Oh, I'd love that. I'm at Alissa at drivers.coop. So LA is definitely on the list for future cities.
Yeah, I'll connect. I'm excited.
Likewise, thanks.
So I think we're at a good spot. I don't see a lot of new questions coming up in the queue. I just want to thank everyone for joining today. Clearly, there's a lot of interest in these structures. I think so many of us are looking for ways to create the economy that our values are, rather than the economy of wealth extraction. And cooperative startups are a viable and growing alternative. I just want to give a shout out to our entrepreneurs. Nirva and Alissa, do you just want to say your Twitter handles one more time?
I'm at Alissa, ALISSA, Orlando, just like in Florida.
Nice. And Nirva? Oh, all right. Well, Nirva, yeah, you can find her through who we follow, or you can DM me. And so if you're interested in cooperative startups, a few resources for you. If you go to the Start.coop webpage, you can sign up for our email list. We have a great page of additional resources that list some of the cooperative loan funds. We also list a huge network of regional co-op developers that can help you get going. If you're interested in learning more about the teams, sign up for our email list or follow us on Twitter, because we'd love to have you come to the graduation ceremony in a few months and see these teams pitch. And there'll be additional money we'll be handing out at graduation, depending on who you vote for. And if you're interested in applying to next year's cohort, would love to talk to you further. You can follow us on Twitter or sign up for our email list. Or if you know people want to invest in co-ops, you know, we're creating the first ever equity fund geared at cooperative startups. So thanks everyone so much for joining today. Have a great rest of your weekend, and you know, go out there and make the dream the reality. Thanks.